Well, hello, investors and traders. I'm LA Little, and this is your weekly NeoTA broadcast where we take a look at these markets and we do it from a neoclassical perspective. That means each time we're asking ourselves what happened last week, what does it tell us about the coming ones? We use supply and demand on the charts to make those decisions. We tape read, essentially. Throwback to the old late 1800s, early 1900s. It's what they used to do, and it gives you a pretty good feel for what the market is doing. We have a small, concise, tight model that allows us to look at the market and make decisions at significant points of interest. If you don't know what I'm talking about, just come over to the Get Started button, hit it. We've got some videos out there that'll help you get started, show you what we're doing, and then we also run classes occasionally. We did a crash course on neoclassical. We'll probably repeat that at some point, and you'll be invited to it if you want to get started with us. As far as what happened last week, let's take a look at the numbers. Let me grab the numbers here. And what we had was a big up week, a breakout on the S&P 500. 6% up now on the S&P, the Dow, and the Russell. The NASDAQ just clawing its way back into positive territory after being negative all year long. So halfway through the year, you get back to positive on the NASDAQ, and you're still trying to push higher on the rest of the indexes. Here's the S&P 500, and what you see is a breakout, right? Clean, sharp breakout. That 2103 area was the key area I talked about. Once we got over that, it's blue skies, right? And this thing just began to run. If we switch over to the weekly view, you can see that 2103 number I was talking about. That was the top of the breakdown bar. That was the key area. Once we got over it, it was steady, straight move to the high, and that's where we find ourselves now. So volume tailing off as prices moving up. We've gotten over swing point highs. You see the red arrow, the green arrow. That's telling us that we've broken out and that we're at blue skies. As far as the monthly, right, on the monthly you're actually seeing a breakout as well. It's not as clear here, but the swing point high 2116.48, and then the other one over here is 2134.72. You're going to want to see it stay over that by the end of the month. It's the middle of July, so we got a couple weeks left. That's going to be a key mark as we head towards the end of the month. Now the S&P is the strongest. The weakest group has been the NDX, that's the big cap technology. And we can kind of see that here in the NASDAQ as they're pushing up. You're getting a little bit of a rollover, a little tough spot for it to get over. Again, we're extended. We're extended in the sense of a short term time frame. And so if we look at it, if I draw it in this way, you can see what I'm saying. In other words, we came off of this in a straight up move. The direction, of course, is up. The angle of ascent is steep. Those typically do not continue. In other words, they get some sort of a rollback. I expect that's what we're going to see here. But there's nothing to say we can't go up, for example, and finish the ABCD structures to the upside before we do that. And so what I'm talking about, of course, is this ABCD structure you see here. Not that much farther to go to finish it off, and that's a possibility. Looking at it on the weekly, same sort of thing. Breakout, you get over the highs. This was the breakdown bar. The next one is trying to go to is up here, and you can see by looking at this index, you can see the wide difference between the, and so the difference, of course, is stark, right? Where you've got new highs on the S&P, you're not even back to the top of this breakdown bar. You just got over this one, which has propelled it higher, but the next one is the one that's going to probably provide resistance. And as those hit resistance, if we get straight up there, those hit resistance. That's about the 5100 mark. Then you're going to see this thing try to turn and come back. At 5100 mark, if you go back and look at it on a daily, it's going to be almost the same area. On Friday, you had the attempted coup in Turkey that sent the dollar soaring after hours, sent the S&P down. I suspect that's going to be a brief little respite that gets bought back up on the futures when they open up later today. I'm recording this a little bit early today, so we'll see what those futures look like when they get started. But given that it was a failed coup, I expect you'll see it turn around and head back the other way. Speaking of the dollar, though, we do have a pretty good stretch going on in the dollar. And you can see that ever since the Brexit vote and the move that was associated with that here, the dollar is held at this higher level. I expect this dollar is going to try and move higher before it's over. And so if you're looking for the dollar to get weak, If we switch it to the weekly, you can see here on the weekly the push up off the Brexit news, and now the consolidation that's kind of taking place. Here's the Brexit bar, now the consolidation at this level. If you divide this up, right, you kind of have another level up here. It looks like that's what it's going to try to attack next, and I suspect it's going to get there and attack it, and probably eventually get through it. If we look overseas, the European markets, the Asian markets, they've had rallies, but they're not nearly as strong as our markets. Our markets are the ones where you see continuation move, new highs, and that's because the U.S. is the one still showing growth, whereas you don't see that in the other countries around the world. So, where do you want to be? Well, right now you want to be in stocks, and if you're not in stocks, and hopefully you're not chasing them here, you want to get in them on the retrace. That's it for tonight. Thanks for joining me. Have a great one. I'll see you next time. Good night.